Hey, good afternoon. This is Dwayne, CFRN. We're going to do a quick recap of everything that's happened in the markets over the last couple of days. It's been some quiet markets, but the way we trade them in the live trading room and also the Concierge trade alerts, it's been nothing short of spectacular. And I'm going to show you exactly what I mean. Now, let's get started with the S&P 500 Emini Futures. There was no Sunday night Globex open, which is usually a big deal for us. We had to wait until Monday night because of the holiday, and the same thing will happen again this coming week, I do believe. This was the Monday night Globex open. We immediately ran up to just above last week's weekly trading zone at 66/67. Overshot it a little bit. Made our way back down to 2262. Now, 2262 is important because on Monday night we had told our subscribers to buy 2262. Okay, and so from 2262 we ran up 7.25 points at $50 per point. That pays $350 per contract. So if you've got on 2 contracts, that's $700. Same distance, 10 contracts, $3,500. Follow me? Okay. Now, we don't believe in just throwing money at the market. Just because you have money, you don't start trading 10 contracts. In fact, with us, you start out in sim, you prove yourself, you pass a 10-day test in the simulator before our blueprint will give you the green light to go live and risk real money in the market. You go live with 1 contract only, and you must increase your account balance by $2,000 before you get authorized to add a second contract. We then put you on a calendar-based method, and the calendar will tell you when it's time to add number 3, number 4, number 5. If at any time along the way you suddenly become unprofitable, we don't allow you to bleed out on the trading floor. We grab you by the pants leg and we drag you back into the safety of the simulator where you cannot lose any money. We go over your trades with you. We help you figure out, what went wrong. If anything did go wrong, you then trade a couple days in the simulator, regain your confidence, and out you go again. Okay? Some people hit the rough patch as soon as they go live. It's to be expected. Some people hit the rough patch at 3 contracts, at 5 contracts, at 10 contracts. It can have something to do with that number. It's like all of a sudden, subconsciously, you just don't feel like you're actually worth that much money. And self-sabotage can set in. We pull you back into the simulator, help you figure it out, help you get your confidence back, and then you step back out wherever you left off. So in other words, if you were at 3 or 5 or 10, you don't have to go back to 1 again. You go right back to where you were. If you continue to experience problems at that number of contracts, then we'll tell you to back it down 1. And if necessary, back it down another until you fully regain your confidence and, most importantly, your profitability. Now, the style of trading that we do in the live trading room is completely different from the trading that goes along with the Concierge trade alerts. However, during your 1-week trial, which costs you $1, we actually teach you both methods. Okay? And then you can decide if you want to become a quarterly Concierge client, which includes the live trading room and the indicator set, or if you simply want to learn how to trade the way we do in the live trading room. You have a full week to fully evaluate, have private mentoring sessions, ask lots of questions, and then ultimately make a decision as to what's best for you. Now, important prices in important areas are almost always tested. And I can show you a perfect example of that by grabbing this 2262, dragging it over here. What price do? It got right back below the trigger, and it ran from 2262 all the way up to 2267. So that's another 5 S&P points at $50 per point, or $250 per contract. Today, on the alerts that were sent out last night, which would be these, we did not have a long trigger on the S&P, but we had a short trigger. We told our subscribers to consider selling 2260. And so far, we've dropped 16 points. 16 points available per contract. At $50 per point, that pays $800 per contract available. We never get out at the swing low or the swing high because we trail our stop. That means it's inevitable that we're always going to leave a little bit on the table for the next guy, and we call that just plain old good karma. Okay? Let's go to the Dow. Yesterday, we had said to buy 19,895. We only had a 27-point gain, which is fractional for the Dow, considering the Dow only pays $5 per point. We had no short trigger on the Dow. Today, we had no long trigger on the Dow, but we had a short trigger at 19,870. We dropped 99 points the last time I counted, and that works out to be, at $5 a point, $495 per contract available. You're not going to get it all. As price starts to pull back, that's when you're going to get stopped out. If you're using our indicator set, you are still in the trade if you still want to be in the trade. Okay? We recommend when Wall Street closes and futures stop for 15 minutes at 4:15 Eastern, just get flat. Take a break, take a rest, and if you want to continue trading, then that's to be done at 6 p.m. Eastern when the markets reopen and the day session margins are back in play. Okay? Bonds. 30-year Treasury bonds. See, here's an example. Using the indicator set, you would still be in the bond trade if you wanted to be in the bond trade. Okay, yesterday we had a stop out. First we had a walk away, then we had a stop out, and then we had a drop of 12 ticks times 31.25 per tick. Sorry about that. Which worked out to be $372 per contract available. Somehow it doesn't sound right. Let's see, 31.25 times 12. Yeah. Let's try 375. So on the pullback, if you only pulled 200 out of that trade, that's a beautiful day because that's per contract. Now, today on the bonds, we told our subscribers, if you get the opportunity, you want to buy 149.02. Okay? And that turned into a $600 per contract trade. If on the pullback you were left with $500. What a beautiful day. So 2 days back to back for the S&P, the Dow, the bonds, and now the NQ. Yesterday we put out a live radio trade that never triggered. However, on Monday night we had told our subscribers on the NQ, buy 49.50. We ran up 44.5 points at $20 per point. That equals $800 plus per contract available. And this was the buy point right here. And then last night we were stopped out by one tick on the long side today on the NQ. Stops happen. If you're still chasing indicators, oscillators, gurus, and oracles, okay, sorry for the phone call. Let me get this out of the way. Today we were looking to sell the NASDAQ at 49.57. Last calculation, we dropped 24 points at $20 per point, $440 per contract available. Now, is it possible that you could have gotten stopped out on this pullback here? It is. You could have also left your stop where you originally placed it and simply paid yourself on the way down. That method is firmly disclosed in a book that I will give you once you take the free trial. Okay? And it's a legitimate copy of the book. It's not some bootleg stuff. I don't do that. All right? Next, let's go to soybeans. We've rolled forward to the H contract, March. Soybeans, I can't show you yesterday because I've rolled as of last night forward to the H. We did okay yesterday in soybeans. In fact, at emini.cfrn.net you can see exactly how we did in soybeans yesterday. Last night we said to buy 1026. We got up to 1028. You need 2 points to meet your daily goal if you're trading the 2420 blueprint. The 2420 blueprint is designed to help you go from 1 to 20 contracts over a period of 24 months, always using profits earned in the market to add the next contract. It goes against our beliefs to go to outside sources for money to add additional contracts. You start with that one contract, you increase your balance by $2,000, you add one contract on top of that, so you got two now, and then the profits generated from those two contracts over a period of a few weeks will allow you to add your third, and it's just a stepping stone process right up to the 20 contract mark. Okay? All right. Now that takes patience. It takes discipline. It means you have to learn how to think in probabilities. It means you have to treat this as a business, not a weekend junket to Vegas. You're not trying to get lucky. You are building a business that has the potential to create generational wealth. You can also lose all of your money and then some. This is why we teach you aggressive risk management. And that's why on our website, cfrn.net, you will find both the CFRN disclaimers and the required CFTC disclaimers, which fully disclose the element of risk that is involved with trading. Trading simply is not suitable for all people. Not every person has the physiological makeup that is required to be a successful trader. The best way to find out is to get a good education before you put live money to work in the markets. And that's the unique opportunity that we offer you, both with the trial and also with the 90-day mentoring program. On the short side, we had two-sided action in beans. We said to sell 10.13. Now, one of three things happened. You had a shot at 1 3/4 points, which is not enough to make your daily goal. Or you didn't like the risk-reward potential. You walked away. In the private mentoring sessions, I teach you how to determine where your stop goes, how much risk you allocate to an individual trade. Actually, I teach you how to read the chart, because the market itself will tell you where the stop needs to go. And once I teach you that, that's information that you will own forever, and your life will be forever changed. Or you got stopped out. Stops happen. Until you accept the fact that stops are a part of the trading business, you'll be like a dog forever chasing his tail, always looking for that special thing that will prevent you from ever being stopped out again. The best trader on planet Earth, whoever that might be, with all the special tools and all kinds of analysis and staff scurrying about, he's going to be profitable 7 out of 10 trades. Yet new people come into the industry and they want 100%, 90%, 80%. When the best guy on planet Earth, whoever that is, who's been at it for decades, best he can do is 70%. You see how we have to change our thinking? This business is unlike any other business that you'll ever encounter. On the Russell, yesterday, we told all of our subscribers to consider being long at 1372. And it ran up $500. Until a few weeks ago, that would have been $1,000. The Russell used to pay $100 per point. It now only pays $50 per point. The good news is in June or July, the Russell is going to leave the ICE exchange and come back to its original home at the CME. And I hope they're going to alleviate that $100 a month data fee. I also hope that they are going to return it to $100 a point instead of just $50 a point. Hope is not a great trading strategy, but when it has to do with things like what will happen to the Russell in the future, hope's okay. Okay, today in the Russell, there was no long trigger, as we had no short yesterday. Today, we had told subscribers to consider selling 1372. RLMH, sell 1372. And that was worth $750 per contract. If you're using the indicator set, you could still be in the trade if you want to be. However, I would recommend that you be flat and out with a nice profit. Okay? Moving on to crude oil. Yesterday, we told subscribers to buy 53.40. There was no short trigger. We wound up $600 plus per contract available. Today, there was no sell trigger, and there was very little upside action. We were looking to buy 54.15. We had a $100 pop, a $140 pop, a $100 pop, and a $220 pop. So, I mean, was there enough movement to get your goal for the day? Yes. Did you knock anything out of the park? Not with crude. No, sir. Last but not least is gold. Now, I've drawn some fibs here. Fibonacci from the most recent swing low on this 30-minute chart up to the most recent swing high. From the swing low to the swing high, price has retraced to the 62% fib retracement. See the red line? Okay. Now what I want you to notice is that price was climbing. It hit this spot long before that became a 62% fib retracement. This is one of the most fascinating things you'll learn about the market from me. Long before this, because see, we had to put in this high before this 62% retracement could exist, because we have to go from the low to the high. However, before that ever happened, look where price ran into trouble. Right there, it got slapped down. And then on the way back up, it consolidated for, these are 30-minute candles, so for 1, 2, maybe 3 hours. Then it made its run to the high, 62% retracement. We had an alert yesterday to buy 1139. That ran up $1,200 per contract. By 1139. Today it was 1144. So today was not a home run kind of story. There was an $80 pop, which in my book becomes a stop out. And then on the short side, sell 1139. We had a $150 drop and then another $150 drop. And now price is just kind of hanging out right below this buy trigger at 1144. If we get a pop tonight, this is what gold looks like on a daily chart. Okay, I drew fibs from the high to the low. On the other chart, I had drawn from the low to the high. Okay, so the obstacles overhead for gold longer term are 1174, 1206, 1230, and then the big resistance, because you see this was once support, it will most likely become good resistance. That is at 1257.58. If we get through 57, when we get through 57.58, we have clear sailing back up to where we belong, 1300 plus. Okay? But I'll guide you through it each and every day. Just be sure to tune in. Now, that's our main site. If you click on Emini News blog, you can catch up on a lot. This will take you to a place where you can watch archives of the daily radio shows, any classes, webinars, seminars, anything I've done over the last 3 years, you'll find on this page. Lots and lots of information. At the very top, now I'm getting ready to post today's radio show, so it's going to be like second post down. That's where you go and take the Concierge Trade Alert trial for $1. $1. And at the end of the week, if you're not happy, I'll send you your $1 back. Okay? And I know some people are like, oh man, if I give them my credit card and I pay $1, then they're just going to slam me for that quarterly fee. That's just ridiculous. We've been at this. We're now in our second decade of broadcast history. You know, we may not be the prettiest, the brightest, the fastest, or the smartest traders, but man, if we don't have our integrity, we have nothing. So, you know, gosh forbid you somehow end up getting charged. If that's not what you want, let us know immediately so we can give you your money back. I mean, don't wait, 3 weeks. That's like going into a restaurant, ordering a fine, meal and a $100 bottle of wine and consuming it all, or a good portion of it, and then standing up and saying, I don't think I like that, and walking out. They'll send a sheriff after you. We don't send the sheriff after you. But, what's fair is fair. All right? So, you can reach me anytime. Support at cfrn.net. Our main number, 949-42-EMINI. I'll say that again, 949-42-EMINI. When you go to our website, when you go to the emini.cfrn.net site, which is a blog, plus there's the cfrn.net emini news blog, our phone number, our email address, it's everywhere. So you'll have no trouble getting in contact. And S&P looks like it's continuing to drop here. The markets have reopened. They'll stay open until 5 p.m. Eastern. These are futures, not stocks. They'll close for an hour, and when they reopen at 6 p.m. Eastern tonight, that will begin the Thursday session. We have 2 trading sessions left in the whole year. Now, if you take a look at what happened last year, we sold off hard into the new year. Man, you try to make a video and the phone just won't stop. All right. emini.cfrn.net. It's like my diary for the last 3 years, maybe longer. And this site here, it's got so much stuff. Good Lord. Just do this. Go here. Find the post that says, pay the man $1. Click that. Pay the $1. Don't worry. You're going to be fine. And then come join us in the live trading room for the last 2 trading days of the year. Plus, I'll extend your trial into the new year so that you get your 5 full days. Then you can make up your mind whether or not this is what you want to do or not. Okay? Remember, we have 2 methods. We have what we do in the live trading room, and we have the Concierge Trade Alerts. But for the $1, I'm going to give you a taste of both. Why do I even want the $1? Just so that I know that you're serious, and I don't feel bad about investing time and energy into you, because you've at least shown me you're willing to spend $1. Oh my goodness. This could be a double bottom forming on the S&P. If this high is taken out, then look for higher prices. Okay? All right, I'm going to sign off, render this video, get it posted. I'll send out a Twitter alert and a Facebook alert once it's posted. And by the time you hear me say that, you'll have already watched the whole video. And we did it in under 30 minutes. For me, that's huge. Thanks for listening. Take care. Hope to see you in the morning. Bye-bye.